Well, as they say, when fixed income and currency markets move, you better pay attention. And this is a story which is being talked about in exactly those markets, currency and fixed income, in a big way, but actually has got little or no attention in equity markets, not just here, but around the world. What has happened in Taiwan over the last 2 days is not normal. Actually, it's far from normal. The Taiwan dollar has surged 10% plus in just 2 trading sessions, a currency, right? This isn't just a currency move. Is it a signal? And that's the question that I'm asking here. Now, these are the moves that I'm talking about with regards to the currency, the Taiwanese dollar. It's pulled off a historic surge, up 5% last Friday, another 5% yesterday. So a 10% surge against the USD in 2 trading sessions. It's up a stunning 14% since the US dollar since the end of March. Mind you, we have not seen this kind of currency move, not even during the wild old days of the Asian financial crisis. So what is happening? Well, it is a classic case of a very long US dollar economy running into a weaker dollar. What do I mean by that line? The line that Taiwan is very long US dollars. Well, this table right here tells you the story. The private sector, along with the Taiwan Central Bank, together hold over $1 trillion in reserves, foreign deposits and overseas investments as well. This is the breakup that I'm talking about. $1 trillion, over $1 trillion. So what's the problem really? Basically, as I said, the drivers for this sharp move are a mix of global macros meeting local factors. We all know that the US administration wants a weaker USD, US dollar. The dollar is sold off. The broader dollar, which is the dollar index, against a basket of currencies, is down 10% from 110 to about 100 in the last 4 months. So you have an economy, the Taiwanese economy, which is $1 trillion long on the US dollar at a time when the US dollar itself is facing a sharp slump in the value of the currency. So there is talk of exporters converting dollars. There is also a lot of chatter about how life insurance companies in Taiwan are responsible for some of this surge. So just to very quickly explain that life insurance point, because that's being discussed quite a bit, around 70% of the investments at Taiwan life insurers are invested overseas, mainly in dollar-denominated bonds and equities, of which only 30% match foreign currency-denominated life insurance policies. So there is a big mismatch here. Now, these life insurers in Taiwan do not 100% hedge the currency mismatch. So the chatter is that it could be that they are covering their positions in a very panicky and quick way. Added to this, there is also, of course, growing skepticism, and this is a broader point, but I think this is important. Broader skepticism around US economic exceptionalism itself starting to fade a little bit. The idea, what is exceptionalism? The idea that US assets should get a premium just because it is the US. The result, a dramatic Forex reset. Now, Taiwan Central Bank yesterday clarified. They said 3 things. They said the US has not asked for this move. Basically, the fact that US has been accusing many countries that they've artificially kept their currencies depreciated, kept it very low. So the central bank in Taiwan said, no, this is not because of the US Treasury asking them to revalue the currency higher. They've asked corporates to stop panic selling the dollar. Most importantly and critically, they've also said that they won't fight the market. I mean, they essentially are not going to be in the market to stabilize the currency. The translation is that this is organic and it may or may not be over soon. There may be more left. Well, the currency sold off another 3% post the central bank clarification as the market took these statements by the central bank as not wanting to intervene. So here's the bigger question. Does Taiwan trigger a broader revaluation across Asia? Now, the economies which are big US dollar asset holders are Malaysia, Thailand, Philippines, Korea, also financial hubs like Singapore and Hong Kong. Could these be next? I think that's the other question. So yes, this is a Taiwan story, but it may be the first real test of a weaker dollar world in Asia. Is this a blip or the beginning of a bigger Forex pivot? For India, here in India, the question for us is, will the damage be collateral at this stage? At least that's the question to my mind. The question is, if the rest of Asian currencies appreciate meaningfully from here, will it force that appreciation impact onto the Indian currency as well? Will we be able to hold on? It is an important question, well worth watching in the coming weeks and months.
Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.